Good morning friends, welcome to Sharekhan pre-market view. Yesterday global markets had a terrible session with indices plummeting across the globe. Investors sold equities across the world. If you look at our own Indian market, they had almost 6% cut on the main indices. Sensex plummeted by more than 1600 points, Nifty was down by about 470 points. This was amid weak cues from the Chinese market, which were down by about 8.5% yesterday. The overall reasons remain the same, the weak Chinese economy, devaluating yuan, plus expectation of a Fed liftoff, which worried and had investors taking risk off the table. Even if you look at the US market, they were extremely volatile yesterday. Dow at one point in time was down over 1000 points. However, it finally recovered to close 588 points down. Even Nasdaq had a cut of about 180 points. S&P was down by about 77 points. Taking cues from the global market, Asia was down in the morning. However, some sort of damage control measures by the Chinese government, the PBOC has infused close to 150 billion yuan via a reverse repo auction, which has seen markets recoup some of its losses. China, which was down by about 6% early in the morning, is down only 3%. In fact, most of the other Asian markets like Nikkei and Hang Seng are back in the green. We also have a Dow future, which is trading in a positive zone. In fact, Nasdaq is up by about 2 percentage points and Dow is up by about 200 points. Now, taking cues from this thing, Singapore Nifty, which was down by close to 300 points yesterday in trade, has recouped most of its losses and is trading in green. The SGX currently is indicating a positive opening by about 157 points. That's a good bit of gain after a huge cut yesterday. If you look at the flows yesterday, FIs were big sellers yesterday in the cash market. They sold to the tune of 5,275 crore in the cash market. DIA yesterday tried to support the market and poured in almost close to 4,097 crores, thereby supporting more downfall. However, the breadth overall was quite negative. Now, given this volatility which would continue to remain in the overall global markets, we are going to face similar kind of volatility. But this offers an excellent opportunity for investors who have stayed out from this market and have some sort of cash which can be deployed into good quality stocks. To have more of a trading perspective as to how Nifty is likely to perform after this kind of an gap opening, let's have a view from our derivatives team.
Good morning friends, we'll give you a view on derivatives. In yesterday's trading session, we have seen Nifty opening up with a sharp cut, that is a gap down opening was observed of around 150 odd points. Due to the negative cues from the international markets, we have seen Nifty opening up with the negative cues and also have opened below our monthly straddle break-even point of which was at 8125, indicating that more selling pressure could be seen in an intraday basis. And eventually we have seen this kind of selling pressure in Nifty in yesterday's trade, and eventually it managed to close 6% lower at 7806.35. Now on the we have seen most of the sectors has seen selling pressure in yesterday's trade. Banking, infrastructure, information technology, FMCG, and metal sector. Most of the sectors showed a sharp selling pressure, due to which we have seen Nifty breaking all the important support levels, which was at 7950, 8000 levels, and has seen continuous selling pressure at higher levels, and eventually managed to close just about 7,800 at 7806.35. The open interest terms on Nifty, we have seen a sharp addition of around 36 odd percentage. We don't see this kind of additions, but since we have seen a sharp cut of around 500 odd points in Nifty in yesterday's trade, and also we have been coming nearby the rollover, so this kind of activity is mainly combined with the sharp cut which we have seen, that is the selling pressure, and also the rollover activity which will take place because we are just nearby the expiry of this series, due to which we have seen a sharp increase in open interest. Cost of carry have decreased from premium to currently it's at discount. It has decreased from positive 4% to negative 4%, that is Nifty premium is trading now, Nifty is trading at a discount of around 2 odd points, And in line with the market going down so sharply, we have seen put call ratio also going inching lower by around 12 odd basis point from 0.88 to 0.76. So the put call ratio is at its important support of around 0.74, 0.76 is a important support for the put call ratio. And if we see a bounce back in the put call ratio, of course, we'll see a bounce back in Nifty. So watch out for the support levels of the put call ratio in the next 3 trading sessions which is left for the expiry. Indian volatility index have shoot up significantly after breaking all of its resistance. For around 2022 was the resistance of volatility index. We have seen it inching out quite sharply, and it's at around multi-year high. It has seen an uptick of around 64%. The last time which we have seen this kind of activity in volatility index was in the 2008 selling, which was been observed. After that, we have seen this kind of activity in yesterday's trade. It's currently trading at 28.13 levels. Now the options activity, higher strike price call options have seen pile up of open interest. Since last 3 to 4 trading sessions, we have been observing significant amount of build up in higher strike price call options. 8,100 has seen an highest addition of around 1,000 percentage, while followed by 8,200 and 8,000 call option, which has seen an addition of around 163 percentage and 98 percentage. This all build up for huge build up in open interest has been due to the mix of long and short. Will not read only that there is only short position which has been taken, and this all call options. There are also a good amount of long positions that have been taken. People are going for a contra call for a small bounce back which can be seen. However, in call option, 8,400 call option is now the highest in terms of open interest. However, the difference between 8,400, 500 and 300 is very less. So eventually, due to the sharp activity which was seen in market in yesterday's trade, this kind of activity has been observed. On the put option, we have seen sharp unwinding. 8,200, which was the highest in terms of open interest, has seen the largest unwinding in yesterday's trade, followed by 8,000 put option and 7,900 put option. The position is now getting set to 7,800 strike price, which is now the second highest in terms of open interest, and the 8,300 interestingly is the highest in terms of open interest. However, this doesn't make sense for the as we are just having 3 days left for the expiry. So watch out for the level of 7,800 in the coming trading session. There are only 2 securities in bank period for today's trade, that is India Cements and Jindal Steel. Interestingly, seeing a sharp sell-off in the market, we have not seen FIs building short positions in a heavy amount. In index futures, there were net sellers of only 411 odd crores, and the open interest of FIs just went up by around 10 odd percentage. The highest addition of is being on the Nifty side. However, the Bank Nifty, we have not seen any kind of addition. In fact, Bank Nifty has seen a reduction in open interest in yesterday's trade, which is a bit positive for the Bank Nifty. For next 1 to 2 trading session, we can expect some kind of bounce back in Bank Nifty compared to Mint Nifty. Index options, there were net sellers of 634 odd crores. Stock futures, there were net buyers of 1214 odd crores, and stock options, there were net sellers of 169 crores only. For the market level of 5 days, we have stands at 8,300 with a lower range at 7,700 and higher range at 8,300. XS Nifty is suggesting some kind of bounce back after seeing 2 days continuous fall. We might see some kind of bounce back, and when expected the gap up opening, SGX Nifty is currently trading at 132 odd points at 7928. That's it from derivatives. Thank you.
Friends, given the volatility in the market, we haven't included trading idea, but let me take you through some important news updates. The first one being that Adani Group has announced investment of close to 25,200 crore for 2 major projects in Chhattisgarh. These projects would include a CDP project and a rice bran solvent extraction plant and refinery in Chhattisgarh. Maruti Suzuki has added 50 more outlets in the quarter ended June 30, 2015. These are probably the next outlet which the company is sought. Now with this expansion, the number of Maruti outlet has increased to 1670 outlets covering about 1336 cities and towns. Odisha will offer to sell iron ore to the proposed POSCO's new steel plant. SEBI has approved merger with commodity regulator FMC. Chennai Petroleum Corporation has set to record rupees 1,000 crore of infusion from its parent IOC. Now this proposal has already been approved by the shareholders. Gateway Distripark has offered to buy Blackstone's stake in Gateway Rail unit for about 600 crore. The Union Ministry for Shipping, Road and Transport, Mr. Nitin Gadkari, has said that the ministry has prepared a scheme of offer for providing subsidy to the shipbuilding industry. Now, the ministry said that this note has been sent to cabinet for approval. Glenmark Pharmaceutical Limited today has announced the launch of a generic teneligliptin. This is a drug to treat diabetes at a substantially lower price compared to the other drugs which are available in the market. So some positive news. Again, the company has also indicated that they may get close to 4 to 6 US FDA approval in the next few months. Eicher Motors motorcycle brand Royal Enfield will be entering the Indonesian market. Now, Indonesian market is the third largest two-wheeler market, and Royal Enfield would be expecting to gain a foothold in the mid-size, that is 250 to 700 cc motorbikes. FIM Industry has received an order from ESL. This is for designing and supplying of 81 lakhs 9-volt LED bulbs. Now this would be supplied in the state of Kerala and Andhra Pradesh. The price of the bulb has been set at 72.4, which would mean that the overall order is close to 58.64 crore. Now Corporation Bank has decided to sell 1000 crore of stressed loan to asset reconstruction company by the end of the current quarter. Crude prices again hit a new low yesterday. They are at 6.5-year low. Now this is very important in the overall macro context, as India's import bill gets reduced by close to 6,700 crore with a $1 decline in the crude price, and this also means that the government subsidy is reduced by close to 600 crores. HPCL has registered its best performance since its formation in 1974, recording the highest ever net profit at 2,733 crore for 2014-15. This is significantly surprised the earlier profit number, which was stood at 1,734 crore. Moving on to watch list that we created for the day. Stock with positive bias we have Divi's Lab, Dr. Reddy's and Kotak Bank. Whereas short with negative bias we have TCS. Now it would be more prudent to focus on stocks for medium to long term investment to deploy some cash. Here we feel that frontline stocks like Aditya Birla, Numo, HDFC Bank, Maruti, Infosys and Ultratech Cement could be the stocks that one can accumulate from a medium to long term perspective. That's all we have in today's session. Thank you.